Let's start off. What is your word of the day? How do you see today shaping up?
My word of the day is incipient, and that's referring to the trade wars that aren't really on us right now. You have China's probe into NVIDIA yesterday, which isn't largely material, but the incipient nature of it is it may lead to something much more significant in the future.
Man, you hit us with the SAT word, Patrick. I had to Google that one myself. Let's talk about what's going on in the markets. Again, we mentioned the S&P and the NASDAQ coming off back-to-back losses. What do you attribute the weakness that we're seeing week to date?
Leading up to this month, you had a real rally on optimism around Trump and his policies, deregulation, pro-growth policies. And in the last few days, you're seeing maybe some of the consequences of the policies that are coming as well. So tariffs, trade wars are the negatives that may come with this new administration. And I think the market's giving back some of the gains because it was largely just thinking about the positives. Net for the next few months, I do think it will be positives. Trump is clearly wants to win. He uses the stock market as a measure of his success, and quick fixes is what he'll do. Maybe long-term consequences is what we'll suffer. But I think in the near term, the markets probably will grind higher for the rest of this year.
All right, so you believe the markets grind higher. How much of that is dependent on a Fed rate cut coming up next week? We show the numbers. About 86% of traders tracked by the CME, they believe we're going to get that quarter-point cut. But today we do have CPI. Do you believe the CPI report could put that cut in jeopardy? And if we don't get that cut, or if we get hawkish commentary from Jay Powell after the Fed meeting, how does that impact the trade until year end?
It's going to impact it, and the Fed's going to be in a quiet period, so they won't be able to comment on it. So they'll have to leak things to CNBC or the Wall Street Journal to get messaging out if they need to. So our view is we do get the cut. Our view is next year you're not going to get as many cuts as the Fed's been indicating or the market's expecting. Our base case for the U.S. economy is a no-landing economy where growth just continues to outstrip potential growth in over 2025 based on strong consumer demand, very strong, robust employment backdrop. But a very strong inflation number will have the Fed thinking how they're going to communicate, but we do expect the cut is in place.
Patrick, you have a pick for us. What is your pick for us today and why?
Alphabet, and in any time you look at a great company, 35% profit margin, growing at 30%, and you compare that to the S&P 500 that's got about a 12% profit margin, growing at maybe 7 to 8%. Why does Alphabet trade at a discount to the S&P 500 on a 12-month forward basis? Doesn't make sense to me. We saw Willow come out yesterday. Alphabet got a jump on that. And that's just an indication of the moonshots that will come from the billions, hundreds of billions in R&D this company's put in place in various aspects. So we think the no-landing economy I'm expecting sets it up very well for advertising revenue. And it is a call option on many other technologies. And it's using AI effectively right now. It's going to continue to do that.